Better?
That's better.
All right. So, like I said, this morning we are in Euro USD sell. All right. Which is currently going to hell. Now, what was being looked for is the usual, the typical. All right. Can somebody, today's Fix It Fridays, so can somebody tell me what we're looking for and what happened and how we're going to trade? In fact, let me pick somebody out. Darren, I want you to tell me what we was looking for, what happened, and how we got into this trade. Let's go. Don't be scared to make mistakes.
What we was looking for the manipulation M. We're looking for the imbalances before that manipulation M to see where it's going to go. If it was going to hit the imbalances back before the Asian session lows and or highs, and yeah, I think that's all to it really. So you got the manipulation M going.
Darren's giving me everything that I want to hear, but in a slight mismatch order. All right. So I want you to start again. I'm going to help you so we can get the order on point. Yeah. All right.
All right. So
definitely. So first and foremost, if I was looking at this chart like this, let's go. Let me rewind. All right. Let me rewind to about here. And I'm going to drop my time frame down to 5 minutes, or let's go 1 minute, or just for argument's sake, let's go 5 minutes. So I wake up in the morning. What's the first thing that I want to understand? All right. And don't forget, obviously,
the trend.
All right. So we identify the range. Now I put this little message in here because we're kind of in the middle of the range, which I don't love. I'm not going to lie to you. In the middle of these two green lines, I don't love it. It's a bit of an issue for me. Okay. But either way, we see this Asian session, which is this red block here. If I want, what I'll do is I'll put some labeling in here. So we're in this Asian session here, or we can see this Asian session here, and it's the morning. It's coming to 7 o'clock. Now, what are we looking for from this? Looking at this Asian session, what's the point of me even mentioning it? What's the point of me even mentioning this Asian session?
Because that was the last big major session before anything happened, before anything turned.
Yeah, all right. But what am I fishing for? Somebody else can come in and answer now. What am I fishing for?
The liquidity that has been built up over the Asian session. So
that's
the Asian highs and the Asian lows.
That's right. So we marked this here, and I marked it as an orange area because I was extra interested in it. But ultimately, I use this here, liquidity. We see liquidity above here. We see liquidity below here. And the market at that time was closer to the top of this liquidity area without breaking it. So it was close to it. So that was the interest. I was like, okay, when we break this liquidity, all right, when we grab this liquidity or sweep this liquidity is the language, then that's when I am looking for the other things that he was talking about, i.e., manipulation M's, all right? So I want to see that liquidity taken, and then I want to see, give me the green flag to get involved, all right? So let's have a look.
You can see the resistance as well. Where
that's right. We can see it building up, and it actually started going in the opposite direction first this morning, and I was like, bloody hell, what's it doing? But we waited, the market came, pushed back up in here, my alert started ringing, and now I'm looking for my manipulation with displacement, all right? And as you can see in here, because there was some other little kind of M's making some funny little shapes, etc. Yeah, but what I am looking for is I'm looking for that displacement. Yeah, that big push down here. Okay, so I've got this M in here. And to be fair, this one M was okay. All right, it wasn't quite as manipulation as I wanted it, but I wasn't ignoring this displacement. And from here, I got in, I placed my stop. Gave it some space above here, to be fair. All right. Now, if we watch it play out, the market actually came, made another M. Let me look at the candles. Really was this one here was the one that got me involved. Now, on my chart, on my MT5, this looks like more of a manipulation M than this one. This right shoulder is higher up. But remember, Look at the other confluences we have, the other ticks in the box. There was liquidity here that was taken. Tick. We are in our key trading time within this yellow box tick. The market is breaking structure, regardless of whether we want to talk the right shoulder is higher than other. The market is, breaking these little structures, breaking structure. Okay, and as we can see, the market has now continued from here and fallen off. Okay, so there's all the ticks in our boxes. Now, at the end of the day, like I said to you, these manipulation M's, like I said, unfortunately, one, they're not showing as clearly as on my MT5. But right now, this is going to hail. Okay, and where are we targeting? Tell me where we're targeting somebody. Where would we target? Does anybody know where would be a good target would be?
Structure or the liquidity that's built up below the other end of the liquidity.
There you go. Perfect. Man, I'm breeding some monster traders. It's that simple. I'm 2.5 grand up. All right. Man, I'm breeding some monster traders. All right. Because that's where we're targeting this liquidity. Now, could the market come and kick back and do a madness? It could do. All right. But either way, we're targeting this liquidity. Now, the issue I'm having, like I said to you, is that this market here, we're kind of in the middle of the range. It's kind of annoying, all right? But we're up close, and move this, the middle of this smaller range, but we kind of got all the way up here into this premium area. And I'm really hoping that now this market rolls off and goes to hail. All right, let me say it one more time. Hail. Yeah? I'm hoping the market rolls off and goes to hail. Like, keeps going. Especially now, bank holiday and that. It's like the whole year's been waiting for something. I want this market to start to go to hail. All right, and falling off. I'm 3.5 up. It's really going. All right, it's got like the clappers. Okay. Let's show you that trade going at the clappers. Every single time, every single morning. All right, same strategy, same things happening. Nothing new, all right? I said to you something. I said the other day, if you could just identify that one thing of that market doing this one thing of what we see every single morning, you'd be nice, all right? Now, I'm making sure that I'm rolling off half of my profits, all right? Now, why am I doing that? Because sometimes when you do that, it kind of stings if you just, oh my God, I'm taking half of the table. But this game is a game of taking half of the table. So it's a game of taking profits, all right? Because there has been many a time, and I've learned my lesson, all right? That I'm like, no, I'm gonna leave it in there, full risk. I wanna get all the monies in my pockets. I want all the monies, I'm telling you. And what happens is that market turns around and says, yo, comes and grabs all your stop losses, and you didn't make no shekels. Okay, and that is not a nice feeling when you're in substantial profits, and then the market turns around and says, mate. That's exactly how it says it. That's what it says. It says, mate, and it just stops you out for nothing. And you figure to yourself, but wait, I swear I was X amount of money up. Yeah. That is not a good look. It's negligent. All right, that you was in such great profits and you allowed the market to turn around and take those profits off you. Yeah, it's like you got robbed. Yeah, I'm hoping nobody here has ever been robbed. Yeah, but just imagine the feeling of ever being robbed. Yeah, that somebody took something that was yours. Yeah, so when you'll get to your 1 to 3. Okay. You must make everything risk-free, and you must, take partials, which is 50% off the table. And yes, you have reduced your potential profits if this goes all the way down here to hell by 50%. Yes, you have. Yeah, but you've taken profits, which is the aim of the game. You put them in your pocket, all right, and your trades are now risk-free. You've got absolutely zero anxiety about your trade. You want it to keep going. Like, I want this trade to keep going and going and going, which it will. It will go past this red liquidity level here, unless it's just doing a madness, but I think it will. Yeah. But see, right now, when I'm expecting a retracement, after that big, massive impulse pushing down here, from maybe I've got it up here, of it pushing, look at all this, I'm expecting a retracement. I'm calm with the retracement. Retrace. Do your worst. I don't care. I'm risk free and I've taken my money.
Jay, is there news coming up as well?
There's not. I think there's news later on, by my understanding. Let's have a look.
What's that lightning bolt at the bottom and the purple one?
We'll check it. Let's have a look first. Yeah, we've got news later on. We've got some USD red folder high impact news, and definitely we've got Fed Powell speaking. This is going to add some volatility that may occur before he speaks at 3 o'clock, yeah, or at the point of he speaks if he starts saying something mad. All right, I even think the Bank of England speech also is going to add some volatility at 4 o'clock. So today could be active. All right, today could be very active. But at the moment, I trade my technicals. Yeah, my technicals are telling me, they're saying, Jay, I'm going to hell. So I'm happy with it. All right. So like I said to you, I want to see it take this level over here, this liquidity over here. I've got an alert on it when it turns down. But, you know, ideally, I'd like to see this market keep running. Why? Why is because of this. Look, let's look at it on a bigger picture. Now, I didn't like this where we was on a smaller range. Because in my opinion, there's a smaller range in here. It was in the middle of that smaller range. But if we're thinking about Russian doll, who's the biggest doll, who has more authority, we are up here. There's that little box thing image again. Look, we are up here in a premium. All right. And I want to see this market rolling over, just like I similarly zoom all the way out. All right, I'm zooming all the way out. Now remember, markets can definitely change, especially when I'm looking all the way back this far. All right, but have a look. We are once again have a look. Every other time that we came up into that little red box, what happened? What happened every time we came up into that red box in the past? This happened. Yeah? Our market sold off. Why? Because it's a premium. So I'm hoping. I've been having a bearish stance on this for some time. Now, can the market decide to do something else? Of course it can. Can do. Maybe. But from a technical perspective, we are in a premium. All right. When we get back down in here, then maybe there's an opportunity for a counter trend. You know, we'll be saying that we're in a discount. Maybe the market wants to push back up into this red area. But from the perspective of, you know, looking at this here, this market is in a premium. We're coming to bank holiday weekend in Great Britain, etc. And it's the market's up in here, fast and about. We've seen some liquidity being taken. And I just want to see this market go to hell. Now it could push up some more, grab some more liquidity before going. Who knows? But based upon the structure and the strategy that we looked on a smaller time frame, which is a day trading strategy, it's about taking money out the markets today. It's not about necessarily being the guru and telling everybody, I told you that this will go down over the next 6 weeks. Well, I don't care about the next 6 weeks. I want to get in and out of the market today and say that I've just bagged $3,000 today. Yeah, that's what I want to do. I mean, it's great if, you know, I predicted the future, but unless there's somehow maybe to benefit from it, like I got some huge swing trading or I'm getting paid by some company to do the analytics for the next 3 months, who cares? I just want to know that right now it's not 9 o'clock yet and I'm, you know, $3,000 up in a trade and I've taken partials. I've taken 50% partials. All right, that sounds better for me than what might be happening. If you want me my prediction, I predict that within the next 6 months or so, this market's going to come down. How is that helping me? How is that, you know, giving me life? That ain't giving me nothing. It's not helping me at all, if I want to be honest. All right. But we do have an overview. We do have a bias. And if the market does something else, which it can do, then then it is what it is. Yeah, if that is the case, then it is what it is. But I have to trade based upon something. I can't trade based upon nothing. I can't make my decisions based upon nothing. I have to make my decisions based upon something. I've got to believe in something. And what I believe in is our strategy that is all about liquidity being taken. It's all about giving us some sort of indication. It's also about understanding where we are in the bigger picture, on that bigger Russian dot. Are we in a premium? Are we in a discount? You know, is the market bullish? Is the market bearish? It's also about understanding if I take a trade, which is very, very important, all right, that I must hit the button and take a trade. But when I take a trade, I'm using my calculator. I know what my lot size is going to be. They know what my risk is going to be. If I want a risk of $300, I know it's going to be 3 times this lot size. If I'm not taking trades, making sure that I am managing my risk. Look at that. Money at risk. If I do not know what my money at risk is, and I'm just hitting the button and hoping for the best, I'm going to blow accounts. I'm going to blow accounts because I'm not managing my money. And this market is designed to take money off us. It's designed that we're not going to be correct all the time. Have a look. What did Uncle say? What did Uncle JP say? All right, I said that this market is coming down here and we're going to take this level. Look at me. I've had this written out. I had this circle drawn out from morning. All right, I lied, Jason. You saw me drew this circle from morning. Yeah. Yep. All right, and then you seen us put our entry over here, and I said that we're gonna go for this liquidity over here. But all of those things have happened, and that's been happening. It's been happening. Full stop. So therefore, this is the strategy. Forget about eight other different strategies. This is the strategy. Yeah, I'm not trying to say that another man's strategy don't work. I just don't care about another man's strategy. It's like you going to the gym and worrying about what my man's doing and how much exercises he's doing. That's not going to get you no muscles. You're not going to grow no muscles worrying about what a next man's doing. You're going to grow your muscles by knowing what you are doing. And then when you get muscles, then maybe you can start flipping it around and say you want to do this and add this to your routine. Imagine a man turning around and telling you he wants to add this to his routine and that to his routine when you're looking at him and he's a hot mess. I'm like, bro, you might as well just keep doing what you're doing for a little bit, bro. Yeah? Man's belly's jiggling around and say, you know what, I think I need to add a little bit of this into my routine. Bro, just stick with what you're doing on the treadmill and just keep going. Yeah? Just keep going, bro. Yeah? Because it's not like to say you've achieved something yet in what you currently understand. So this is where we are in regards to our trading. If this is the only thing you can identify, which I have put in a document, I have put it in black and white, I am teaching every single morning. If this is the only thing you get that you can see in these markets, it's enough to make you successful. Because you'd say, Jay, I'm not taking any trade today. I said, why? You say, okay, I haven't seen no liquidity being taken, and I haven't seen, we're in the wrong part of the. To be fair, I don't even love this trade. No, I'm lying. I like this trade a bit more because we're at the top, we're in a premium. But if it wasn't a premium in the middle of the range, I would be like, you know, I can't see a trade here. If the liquidity didn't, look, there was other trades. Let me show you guys. I marked up a lot of different things. But where they are in the range, have a look. Let me go to gold. All right. Gold was here. And I'm looking at it like, right, we already kind of trickled past this Asian session high, this in Frankfurt. And we're kind of in the middle of nowhere. Let's go and have a look at another one. Again, we already trickled past Asian session high, so the next high is over here, in my opinion, that I'll be interested in, it sweeping this liquidity, because we already kind of, it wasn't really a sweep, this was just like a very slow cleanup that happened. So here's the liquidity over here, so I was like, it's not, I've got alerts on them lines, but it wasn't, you know, fitting my rules, my plan. So look at EJ. EJ is the same, look. Don't worry about this line here. That's old line. But look, EJ's sitting here. Asian session highs over here. Asian session lows over here. I'm looking at it thinking to myself, meh. because I want to take a trade after liquidity's been taken. And this market's sitting in between these two liquidity levels, slap bang in the middle. I'm like, yeah, I don't care about what's going on there. But I was caring about EU this morning. Why? Let me wipe the charts. I'll wipe it. I was caring about EU this morning. Have a look, because this morning, remember before this yellow box is 7 o'clock. Look where the Asian session high was. We was right up against this Asian session high. And if you want to say what Darren said, a good point, the liquidity building up, the resistor market couldn't break here. Look, couldn't break. Why the Asian session high? So I was like, okay, all right, okay, I get it. I was like, okay, let's see now if we can. What happens when we break this? Take this liquidity. You know, I'm waiting for my manipulation M, which I got. You know. And I decided to get involved and manage my risk. And I scaled into the position and we went all the way down here. And essentially now we have tapped this liquidity. Yeah, essentially now that really, if I look, should be my end of my trade. But I think I've slipped a little bit by talking to you. When I say end of my trade, why? Because I believe it got to at least a 1 to 10. Yeah, it's my end of my trade. So I'm actually still in the trade, even though it's all risk free. And I really don't need to be. So I'll tell you what I'm going to do. I'll take the money. I don't have a problem with that. I'm going to close out.
It's created a manipulation W.
It has. Exactly. That's what I saw also. And I'm glad you saw it as well. It shows me that you're on job. Because down here, it ticked the liquidity down here and did make a manipulation W in a 1 minute time frame. All right, let's have a look if it tapped in. Didn't tap in, but it may do. Now don't get it twisted. Remember what I said about the smaller range? That I was like, on the smaller range, we are kind of in the middle of the range. Don't get it twisted. This market, after coming and pushing all the way down here, it can do this. Because it will still be in the premium. Let me go back. I'm going to go back to where all my drawings were. Because I can't bother to draw everything. I'll try and clean it up for you because I know it gets a little bit mad. Come on. All right. So that red box, the reason why the whole screen is red is because on a bigger picture, remember I drew the red premium little range. That's why everything's red. All right. But the point is that on this smaller range, try and see. I know I'm making something mad. Let me try and turn some things off. Turn this off. Okay, so on the smaller range, which is this green range coming down here, we're a bit in the middle of that range, the middle to the top of that range, of this green dotted line coming down here. So don't get it twisted. This market could have, look, let's even look here. Yeah, see? Could have made a little 50% retracement. So it's a whole retracement energy, meaning look, this market was ping-ponging around. Just gonna let me move back, have a look. The market came from up here, pinged, ponged, pinged, ponged, and it may want to ping back up into here before coming down here. Okay. So what it may have done is made a push up in here, then made a 50% retracement. Look where that 50% line is right here. Yeah, might have decided to make a nice 50% retracement in here. Let's zoom out and see that. Look at the market. Right in here, 50% retracement of this little impulse, and it might be decided that it wants to come up in here. Definitely possible. Yeah, so therefore, even though we took the liquidity from over there, and we pushed down to the next bit of liquidity down here, perfectly, but right at that liquidity level, which happens to be a 50% level, oh, what a coinky dink, all right? And now we've seen a manipulation W on a 1 minute time frame and on a 3 minute time frame and, well, this will say 1 minute and 3 minute, all right? So let's identify, let's have a look at that little area here. In here, with the middle of that, let me give it this. Middle of our W is. All right, let's have a look. This whole candle is an area of interest on a 3-minute time frame, and on a 1-minute time frame, this area here is an interest. So there is a potential entry here, in my opinion. It's possible. It is not impossible. Why? Because liquidity has been taken from here. Maybe the market is ramping and wants to push up in here. Remember, today we do have news also. So from a technical perspective, this market has done, again, our strategy. It's taken liquidity from a level and it may run in the opposite direction. And ultimately, right now, even though overall on a much bigger, Russian doll, that the market is bearish or, gone into a premium area, but the market from down here on a smaller time frame, if we go to our 15-minute, for example, here was some structure. Well, look, here is structure over here, 15-minute. Let's go on a smaller time frame, 5-minute, for argument's sake. We can see that the market's coming here, and the market started to break some structure in it. It's making some higher highs and higher lows, higher highs, higher lows, higher highs. This is a retracement, yes. And this could be a lower low for it to make a lower high and start coming down in here. Could do. But, trading from the perspective of that liquidity just been taken and this manipulation W's, there may be a reaction. And maybe we missed the reaction. Maybe it's going to go without us. It's looking eager, like it's just on its way. Okay, but as soon as I saw that, there's a reason why. Obviously, I was talking, but I saw it take the liquidity. But then I also saw this here. That's why I said, you know what, cool, I'll just flatten my positions and take my profits. Because in my opinion, this market could very easily do this. So even though I was risk-free and I took 50% off, but I was still probably like £1,200 up, £1,000 up, until the market started kicking back on me. I think maybe I closed out maybe like, I don't know, $700. Because I see this, I don't like this. Now if the market comes back down in here and melts through here, okay, cool. We can try and look for another entry based upon indication, correction, continuation, which you guys also understand. All right. Now, unfortunately, it looks like the market may have just doesn't care about tapping back in. All right. It looks like the market may just not give a damn about tapping back in. All right. However, I'm going to put my alerts in there. Okay? If it does change its mind, I'm going to be like, thank you very much. Yeah. And even then, I must manage my risk because that market, if it wants to, can simply melt straight through this area. Okay? It can do. Remember, these markets are, a living, breathing thing. Right now, this market is tapping into a previous battleground. Okay? Let's see what happens here. If it goes without us and doesn't tap into this area here, is what it is. But what I would say is this, all right? Let's zoom out. Let's look at a bigger picture. This market here is only reason I don't love this structure here. I'm not gonna lie to you. When I'm looking in here, it's very difficult to see structure here on a 15-minute time frame, and this wick was the lowest point. It's a bit of a concern to me. All right. On a 5-minute time frame, maybe there's a little bit of structure in here. Maybe we're getting some structure in here. Last bit of structure in here. All right, maybe very, very, because the market was moving so quickly through these prices. So either way, you can see the market's been making some higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher high. And they've made this retracement here, boom, back into 50% of this whole impulse. That's the reason why I'm concerned. Because at 50%, this market could decide to go, you know what, let's get back over to this other side here, this green line. Okay. Now what I want to do is I want to simplify this. I want to simplify our trading. All right, I want to simplify what you can see. Sometimes all of these lines and numbers and that becomes overwhelming, okay? But the reality is it's not overwhelming. It's a very, very basic concept. Oh, here we go. One second. Man took his eye off it. Maybe, baby. All right, so have a look on the 1-minute time frame. We're coming into this area here. Now remember, there was a 3-minute break also. And that whole candle here, especially this little gap in here, becomes a real target. Okay, I'm gonna make that little green area here. All right, becomes a bit of a target. On a 1-minute time frame, down here is more of an entry, this little imbalance here. Okay, let's see All right, let's see. Now, let me show you a good way you can do this. I know someone's thinking to themselves, oh, they're anxious. They got their finger over the button. This zone here is only 5 pips. Okay, so you can do the math on it. For anybody who wants to risk $100, that's going to be a 2 lot on a 100K account. I know that off by heart. Okay, now watch. Let me show you another thing you can do. I know when you start seeing these candles pushing up and stuff like that, you start thinking to yourself, oh my gosh, and you're trying to hit the button because you think to yourself, you've missed it. Now, let me show you what you can do. Are you ready? This is a bit of sauce as well. I don't do that because I was thinking to myself that the market should at least get down to, let's look at that 3-minute time frame. Within this candle here, that broke the, there we go. There we go. All right. Just go into that little candle there. I'm still gonna wait a bit. All right. So on the 1-minute time frame, it's all the way down here. Look, that manipulation W is down here, and that break is in here, and there's a candle in here that has imbalance. On a 3-minute time frame, though, that middle section is kind of here, and we're just about in there. All right. Okay. Now I can hit the button now. I could hit the button now on the basis. Look, if I hit the button now, 6 pips, yeah, or I can wait, and waiting means that if it dips in here, I get a better entry into my actual place where I kind of saw it. But if it doesn't and it closes back above here, I can just take indication, correction, continuation there. And that's 4.5 pips. It's actually less than me hitting the button at a lower place. The only issue that you have there is then afterwards your stop's not as low as it could possibly be. All right. So let's see what happens. I'm watching it. I'm going to watch on a 1-minute time frame and see whether or not this market wants to get all the way into it. Can you see in here? This is the 1-minute area. If I do that, that's like kind of the 1-minute area, and that 3-minute area is kind of from about here. But kind of hit, hey, look, I can hit the button here. Like I can hit the button here if you really wanted to. So it's going to be about 5 pips plus your spread. Who knows? All right. But we're gonna wait and see. Let's see what the candles show us. Is the candle showing us anything that's gonna get us excited? Can I see big bearish engulfing candles? Do I see some big wick rejection? And if I don't, and I miss it, and it jumps up here and closes above here, well, cool. I'll just take. Oops. I will just take that as the entry. Or if I want to be very safe, I could do that for 10 pips. Doesn't matter. Do you understand what I'm saying? Like, it's one thing I want to tell you guys. You see, when you're in a trade for profits, and yeah, you're thinking to yourself, oh, it could have been a 10 lot, but you're only in a 5 lot. The fact that you're in profits kind of smooths that over. Yeah, you feel good on the basis of I'm still up $500. Could have been 800, but you're still up 500. Let me tell you what stinks. You're down. You're looking at it, you're like, oh my goodness gracious me. All right. So, you know, the aim of this game is not about, and I said it earlier, all right, the recording's there. It's not about I am a guru and I understand everything this market's going to do, because nobody understands everything this market's going to do. Nobody does. If they did, they'd take one trade. They'd sell their house, their kids, the car, their jewelry, and they'd take one trade on the basis that they knew exactly what the market was going to go and do. That's what I'd do. Live, you guys can get to go to the future, yeah? If any of you got like a little, what do they call it, DeLorean, yeah? You don't remember the DeLorean, yeah? Let me put a little alert in here because I was going to just turn my head away from it. Do you guys remember the DeLorean, yeah, from Back to the Future? Yeah, if you've got a DeLorean from Back to the Future and you can go, to, you know, to the future and you can go and see what's going on tomorrow and you know exactly what US 30 tanks for 1,000 pips, well, by all means, come and let me know. And even then, let me tell you something, even then you wouldn't put everything on it. Because what if you change something? you always had this conversation, right? What if you change something by going to the future? Yeah? And then it doesn't actually play out the way you thought it was going to play out. Yeah, what if that happens? Yeah, so you're still not going to probably put absolutely everything on it. Yeah? But if you do go to the future and you see what happens in the markets, by all means, then maybe that might give you an edge to say you're going to go heavy, go more than your 1% risk. Okay, but until that happens, you don't know. So all you got to do is trust in you've got some sort of edge, i.e. a strategy, Have a look here. Look, for the people that hit down here, they're in the blue already. I haven't hit, for full transparency, I haven't hit. But as soon as I see this even break this level, yeah, because it shouldn't be up in here without coming down here. Even if it breaks this level, I'm in. All right, so don't say I didn't tell you. And I don't mind, and you can either go here for your 5 pips or down here for your 10 pips. I'll let you know for free 10 pips is a much safer place. Yeah, because you're now covering that little concern of that 1 minute time frame. All right. Here's an aggressive entry below this low. All right. It's completely down to yourself what you want to do. All right. And any minute now, in my opinion, this shouldn't be up here. I'm in. All right. I'm in. Okay. I'm in on the basis that, and I'm placing my stop. All right, now, I'm going to explain exactly what's going on again with everything that we've just done. I'm also cross-referencing GU. All right, I am also cross-referencing GU that I think, there's my other line I put in. I'm also cross-referencing GU that I believe may want to push past all of this liquidity over here before doing something. All right. GU is a bit of a concern for me. Let's have a look. Let's have a look. All right, so let's go. I'm going to break down this EU trade, and I'm going to explain to you everything that we've done so that you can replicate what I've done. All right, we're going to delete everything off these charts, and we're going to get serious. I'm going to get so serious. I'm going to turn down my funky R&B soul mix. You get me? Cool. Let's go. All right. So this market here is Euro USD. Okay. Now I'm starting again. So for the people that already know what's going on, great. All right. I'm starting again. And for the trade that I've just hit the button on, let me tell you something about that trade. It's with God now. Yeah. It's nothing to do with me. I've managed my risk. I hit the button. That trade now no longer has anything to do with me. It's going to do what it wants to do. All right. It's very important that you understand that. It's very important that you get the fact that once you've taken the trade, it's no, you can't watch it and juju it into doing something. Yeah, it's gonna do what it needs to do. All right. Okay. This is our EU market that we can see if we draw some lines in, however way, because remember, these lines are just guides. I've drawn them so many times. Every single time I draw them, it's not going to be exactly the same. It might be off a little bit by a millimeter or two. So you can see here, we're in a premium and I'm interested in selling this market. That's what my interest is. I do want to sell this market. Yeah, I want to get in for the sell and I want it to go to hell. All right. That's on a much, much bigger picture. Me looking at this as weekly. What does that mean? Every single candle is a week in time. It's ages. It's a long time. Okay. But we can see here that this market is coming. It's kind of been trading within this range in here. Okay. I'm going to get rid of the middle. I'm going to give it a little border, orange border. The market's been trading within that range over there. Okay. Now, if we drop our time frame down to our daily or 4 hour, I should have said daily, we can see that the market here has been bullish. All right. It has been bullish, making higher highs and higher lows on these time frames. All right, on all of these time frames, the market has been making higher highs and higher lows. That's a fact. It's not my opinions. That's a fact. Okay. Now, if we drop to our hour time frame, we can see that the market tapped into a premium, a top end of this range. I've put a sub range in here, and I put another top end over here. But tapped into the top of this range, and then we've had a little reaction. Okay, where the market could be deciding that it wants to push down, ping, pong to the bottom of this green range. Definitely could do. Okay, definitely could do. And if we go to our 15-minute time frame, we can see here that the market is a little bit, in the middle of this kind of bigger range, okay? And in my opinion, like for example, right now, that little buy scenario that we just took off the liquidity has been taken here, could simply be pushing up into this level in here to fall down some more. So that little buy that we just taken, even though it's going backwards doing the moonwalk, all right, could be tapping into, have a look, if I go and look on a 5-minute time frame for argument's sake, some sort of level in here. So let's go 5 minutes, let's go 10 minute, let's go 15 minute, let's go 3 minute. Yeah, could be just trying to come in here, close some of this imbalance here and here. All right, before deciding it wants to continue falling down here and get into this green line. All right, and I'd prefer that it got to this green line and actually melted straight through this green line. But based upon the liquidity just being taken here on EU, on a 1 minute and it tapping into this 3-minute manipulation W here. So it tapped in, look at that, perfectly tapped in here. That's the middle of the W. We've seen a little reaction to it over here, that maybe the market wants to push up into these levels, giving us some profits before deciding it wants to turn around, or the market wants to continue pushing straight past this energy here, which I don't think so. All right, I think that this session's momentum is going to be bearish. That's what I actually believe. All right, so like I said, that little buy that's been taken is very short term. It's about grab your money and run. Okay, that this market might push up into these levels here, and then we might see it break and decide it wants to come back down into these levels. Okay, maybe it might break before that time, and I'm a bit concerned because, like I said to you, one thing I would say, which contradicts the fact of me taking that small little EU buy. What contradicts it, and I'm going to say it out loud, maybe I should have said it before we hit the button, is that we kind of want to trade away. We want to trade away from where they call this an inducement, but where this grab was from. So sells are perfect because we're trading away from it. Yeah, though we've got this little buy energy here, which is pushed up in here, yes, and in my opinion may even push up into here, may do. If it breaks this structure here, guys, you can stop yourself out. Even if your stop's all the way down here. Well, if you've managed your risk, you can leave it. If you're risking a little $100, you can leave it, because it may come and tap into here and then do this. Definitely may do. All right, but this still could be a short term. Now, whether it's going to go all the way back up in here, I'm not too sure about. But it could definitely from down here, if we're taking that 1 minute entry over here or this 3 minute entry over here, maybe you get a little 1 to 1, little 1 to 2 potential in here. Either way, this, like I said, I'll be watching it and managing my risk, making it risk free if we get up into these levels as quickly as possible, because I feel like we may be trying to get to this shore over here. Okay, and we might see this market running down, taking liquidity off below here and pushing down into this shore here. All right, we may do. It's a bit of a either or kind of scenario because, like I said, kind of a bit in the middle of this kind of range. And on a bigger picture, here's the top of this consolidation on EU. That's the top over there. This is the bottom over here. So don't get twisted. If the market wanted to be stubborn, it could push all the way back up to the top of this level in here. And if it really wanted to say, you know what, I'm going to get some fuel before I make my journey and really start going to hell, well, where is the fuel? That's where the fuel is. See it? So don't get twisted. As much as that market pushed down there, that liquid, it could decide right now, you know what, let's go and get that fuel. Nam, 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 nam. And then we're really ready, we're set to go to hell. That's where the fuel is. You see? So though you see how it's quite complex that we're looking at this and we're thinking to ourselves, yeah, but on a shorter term basis, it might want to come down here, but on a higher time basis, like we have to be doing that and looking at this multi-time frame analysis. This market may want to come down to this green line. Does it mean it wants to come down like this, straight down? No, it might dilly-dally like this, sideways, then tap it, then go. It might not want to come down to this green line and want to accelerate up into getting that fuel. Change the angle and accelerate. You see when I'm drawing my trend line, sometimes I draw it and I have to draw another one and another one as the market, the angle gets more parabolic. Yeah. So based upon, like I said to you, just based upon liquidity, market structure, price action, we're able to take trades regardless of these quite complex different narratives that are happening on many time frames. Yeah, we're able to take these trades and be able to look at it. And like I said to you, if you're managing your risk, these things should be no issues. Like right here, this market's come up here, look here's structure here on a 1 minute time frame, made an indication over here. Yeah, made a correction, made a continuation. I want to see this market continue pushing up in here. It should not be breaking this level. If it does break this level, I can stop myself out, or I can be like, okay, cool, it's not doing nothing. Market's indicated, look, the structure was coming down here. You don't understand indication, correction, continuation because we did it extensively. All right. We can see here that this here was the last high for the lowest point. Okay. And the market indicated past there. If we want to take this as the correction and continuation, or I'd take this as the correction to be fair. All right. I'll take that as the correction, and it's continued over here. Like that's showing me that's bullish energy. How much bullish energy is a different question, but that is definitely showing me boom, 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 bullish energy. It shouldn't break past here. If it does, then that bullish energy has died out or it's doing something else. And I'm happy with that. I'm cool with that. I'm fine with that. Why am I fine with that? Because I've managed my risk. I've just taken a trade that's been profitable. So I have a float for the day, and it is what it is. But let me tell you, on a bigger picture, I am quite concerned of whether that market wants to come down and get to this orange line, because in this session, which is London session, and this especially within this kill zone, it's best to trade away from where the market first induces liquidity. That's my only concern. Yeah, especially with that little buy. It's better to, within that session's kind of showed you what it's on. It's kind of said, you know what, we're on grabbing liquid, we're on going south. Yeah, that's what it's kind of showed you that we are on going south. So therefore, trading north within this session is not maybe the best idea. Okay. And we'll see if it pans out right now. I'll put a little alert in here, but for me, if it comes down here, I don't mind closing that early, to be fair, because I don't like the fact, yes, there was this liquidity here. I mean, this breaker structure W on the 1 minute time frame. And on that basis, the market could come all the way down here, tap in and then go. Could do. It could do. But, I'm thinking to myself, maybe it's better that if you've taken a very aggressive entry, you could stop yourself out here and you could get in again here if you wanted to. But if your stop's below here, then you're calm. That's why I said to you, there's a difference. This is the lower risk stop. Your stop's down here, you're calm, is what it is. If you lose your small, 0.1% of your account, your $100 or whatever it may be, then it is what it is. You lost. Take on your chin. All right. But I'm just saying, be aware that I'm not fully convinced that this market might go up here to space. I'm not. The market is actually sitting at a 50% level as well of this impulse, which is a bit of a concern also. From about here to here. See? All right. So our market is sitting around here, and it might decide it wants to roll over. If it does roll over, give me indication, correction, continuation. Do you know what I'm going to do? Let's go. Because it's just a continuation of the move that I've done from this morning that has paid me so well. I don't need to be this low. I could say, okay, cool, no problem. I get it. You want to go down. You show me you wanted to go down from up here where I took the trade. Brrr, all here. You tapped in, took some liquidity and had a reaction. So that liquidity reaction has happened. It's not that I say it hasn't happened. Yeah, it has happened. You know, so that dead bounce here, boom, 50% of the way. Like I said, if this market comes and breaks down below this indication, correction, continuation, this structure, then I would be looking to do that. Believing that this market is going to trade straight past this level here, keep going and go for some other liquidity, i.e. this is a New York session liquidity, i.e. loads of liquidity. It really takes the liquidity there because they're doubling up, boom, boom, relative equal lows, all right, i.e. liquidity between below New York sessions over here, i.e. back down towards this green line, which is the other stop. Why is it the other stop? Because we've drawn our trend lines in and we can clearly see there is this is the confusion. Like I said, this is a bigger range here, okay, and there's a smaller range in here, but we can see in here how the market has been ping pong, ping pong. So the market might want to ping. Yeah, that's the sell energy that I'm in, of why I'm saying that the market might want to ping. I actually want it to ping straight past there and go all the way to hell. Yeah, I want to sell this market, but don't get it twisted. The market could decide that it wants to see, or even because of this energy happening over here, that I put this other little trend line in here. It's definitely not impossible. I tend to not say this one. Why? Because this, well, maybe because this is the top of that yellow box. See that yellow box? That's that bigger box that we show on a much bigger time frame the market's trading within. So we're in the premium of this consolidation. So if we get up to these levels, this would be right at the top of it again, where we might start seeing a reaction in that consolidation. Or it might want to grab the liquidity again, like I said, because as I mentioned, the liquidity is above this high. So maybe, baby. All right. But the bottom line is that you are going to take the trades based upon some sort of God, based upon some sort of rules. You're going to take the trade. Yeah. And then because you've managed your risk and you don't care that much, you're going to leave the rest to God. Yeah. You're not going to sit here. Oh, my strategy don't work. I've taken losses. Everybody take losses. Why isn't this allowing me to move the screen? Which is strange. It's gone mad. Yeah, everybody takes losses. Yeah. Oh, I see why. It's been moving this thing, my orange box, by accident. Yeah, everybody takes losses. It's part of the game. Yeah, if you're not willing to take losses, then get out of the kitchen. Yeah, everybody's out here taking losses. Everybody. There was a girl on.
Got to roll with the punches.
Got to roll with the punches, man. There was a girl on yesterday, and she spoke about, how she blew her account and how she, went to say she was chasing and doing things we're supposed to do. It's part and parcel of it, man. If you've got a problem with blowing it's like, what they say when it comes to boxing, a saying that they say is records are for DJs. When man out here like, yeah, I got, this is my record. Man said that's for DJs, yo. Because on bar a few boxers, yeah, who have had a phenomenal record. On the day, especially if heavyweight boxing, anybody can get caught. Yeah, anybody can get caught. Some of your best boxers that you've loved, your Muhammad Ali's, your Mike Tyson's, your whoever it is your favorite boxer, have lost. Do you understand? They have lost. Because if you're in the ring, you automatically accept the risk that my man might close his eyes, throw the absolute kitchen sink in his hand towards you, and it might catch you on your jaw and you might wake up at home tucked up in bed. That's it. You accept that. It's like being a Formula One driver. You accept that as soon as you get in that car that's doing 200 miles per hour, that if you catch that bend wrong, you could lick the wall and burst into flames. You must accept that, or don't get in the car. It's not for you. That sport is not your thing. Yeah? It's the same with trading, guys. So please get used to, remember, you should say out loud, I love small losses. That should be your mantra. I love small losses. Because you're gonna lose. So you might as well at least lose with some small losses. Yeah? You don't want big losses. Guys, amazing day. I'm gonna put something on for us to watch and engage with. It's Friday. I know it's bank holiday weekend. Most people got the weekend off. You know, for the bank holiday, whatever you're doing. If you find yourself in carnival, all right, stay safe, enjoy yourself. If you find yourself out and about, you know, go and do what you need to do. If you're out with a family or chilling, then chill, have the time to rest. Either way, amazing day. I hopefully will be here New York session. All right. I'm gonna put something on. We're gonna learn something new about trading from Abdul Rashid, who seems to be quite interested in volume profile. He's just put up a video 16 hours ago. I'm gonna watch it, guys.